Welcome to the Pump and Dump channel for another video, this time revisiting Nordic American Tankers. I will make the disclaimer up front this time. This is not investment advice or recommendations to buy or not to buy this stock. I will just present my opinion, my analysis, my commentary on how I see things panning out for Nordic American Tankers in the tanker market going forward into the future. And I do not intend to make anyone feel like they should sell if they own the stock or not buy if they really want to buy it. I'm just going to lay out my view of how I see things unfolding in the longer term. So, reasons for this video: I see day after day more videos spawning from people who've never talked about the stock before, and then people who are, they're making follow-up videos from their videos the day before and the day before that, and basically the main takeaway I'm getting from seeing and watching a few of these videos is that the people are making them, and of course that also includes a lot of people in the comment sections who are jumping on the bandwagon. For the most part, they have absolutely no idea what they are talking about. They don't know the sector, they don't understand the drivers in the sector, they don't have a valuation for the companies, they don't have a target price to enter, to exit. They really kind of basically are in a situation where they feel they want to own the stock, they need to own the stock. It's this fear of missing out. They rather would risk losing money than risk not having the chance of having the shot to the moon. And that is kind of reflective of the investment philosophy of on a hunch bet a bunch, and that is a certain way to lose a lot of money, because this is a cyclical industry. And if you think about it, when the news flow is great, when they are featured in the news or on television shows like Jim Cramer's Mad Money, then we are more likely to a top than we are to a bottom. So, getting to the valuation of the company, I'll just throw out a simple way for anyone who wants to just do a quick valuation of a tanker stock, is looking at this company in particular, looking at the 23 Suezmaxes they have. If we wanted to rebuild this company from scratch, we'd have to pay 60 million for a brand new Suezmax, which has a life expectancy of about 25 years. And we would pay 1.4 billion to build this fleet. It would take, of course, 3 years to take delivery of, but just doing it conceptually, we would see that it's 1.4 billion to get a brand new fleet of Suezmaxes. Then you would probably need to also look at the liabilities. The company has about 400 million in liabilities, and therefore one would say conceptually I could rebuild this company with a brand new fleet for $1 billion. Then of course you have to look at the average age of the fleet, which is about 12.5 years old. So then you'd say conceptually it should cost me only 500 million to rebuild this company from scratch. So looking at the share price and the market cap in particular, you would have to conclude that it's more likely overvalued than undervalued at this point in time. But in any case, doing a discounted cash flow to look at it in terms of valuation given the current environment, I looked at it yesterday when spot rates that I retrieved online were around $40,000 a day, and the charter rates, also 1-year charter rates, were listed at $40,000 a day. So doing a discounted cash flow valuation with Nordic American Tankers, I would use the 40,000 from the spot rate, because Nordic American Tankers is usually the company known best for having exposure to the spot market. So when times are good, they see the benefit immediately, and when times are bad, they eat the losses throughout the bad times. So using 40,000 as a base for valuing the company, the intrinsic value I get is $2.62. I would say that the current share price at $5.12 is reflective of a 100% premium above the intrinsic value. There's of course maybe an argument to be made that maybe my calculation is wrong, but I can just go back to 2019 when I put out my first video about Nordic American Tankers. When I bought them here, spot rates had just moved to 40,000, were looking strong. The fundamentals were bullish because of the tightness in supply due to the scrubber fittings which were being done by many companies. So the supply of tankers was a bit tight back in the end of 2019. That was kind of the start of this bull market. So I bought it and I sold under $4 because conceptually I thought $45,000, which would imply, I think it was $4 or so valuation at that point in time. I thought $45,000 in the very long term seems a bit rich, and I didn't want to you know, take the risk on of owning this and watching the story of the tightness in supply of vessels deteriorate, and you know, I'd then be holding it, you know, from here to, let's say, here, and you know, then I would have to worry, does it go up to here or does it continue going down with the economic meltdown that we have seen with the stock market going down in March. So I kind of just, like, you know, I just said $45,000, that valuation, you know, implied valuation, that was enough for me, so I got out, and I went with other tanker stocks, but that's a different story. I'm just going to stick now to Nordic American Tankers. So looking at how the stock has, of course, traded in April all the way up to $9, I thought I'd just throw out some numbers to kind of clarify what people who bought in these areas would need to see in the long term, and they would have to accept that that would play out. And if they were wrong, they would have to, you know, just accept that they were wrong. But you know, if the rates I put out there seem a bit high, then maybe you need to reevaluate what your premises are. But essentially, I looked at a few numbers, just $50,000 long term. That would imply a valuation of $6.50. And if we assume that long-term rates achieve $55,000 a day, that would be indicative of an $8.43 share price, with, you know, an implied 5% return year over year. That would basically be the parameters. Now, if you think that 50,000 is achievable, then you have to, of course, you know, look at the reality. The reality is that the operating costs, not the ones that the CEO likes to always quote, the vessel operating costs that are only like $8,000, he says. But if you look at all-in costs, including expenses for the voyages, the G&A, the debt, it's more like $25,000 a day. But you know, if it was really just $8,000 a day, you would look at the Suezmax rates at 40,000 or 200,000. You'd think that's insane, and you'd think they'd have to go back down to like 15,000 at least. But anyway, operating costs are more like 25,000. So this company, you know, if rates do achieve 40,000 in the very long term, then they're still, you know, in good shape. If they achieve just $35,000 a day, this company is still in decent shape, but the share price would reflect a much lower valuation, and that's kind of what investors are interested in, is in the valuation and the price they can buy and sell it at. So the premium that we see in Nordic American Tankers, from my opinion, is indicative of the fact that this company is showing the benefits from the bull market, which started in 2019 as the first tanker stock, because they are exposed to the spot market more heavily, so they start seeing the strong spot market translating into improved cash flow, improved income statement, improved earnings per share, and they look like they're the superior, you know, company if you compare it to the other companies who have a more conservative standpoint, using more charters. And as a consequence of that, one could argue that the premium is justified in some way, because, you know, they are making the money in the spot market, whereas other companies have not had as many vessels in the spot market, so those are going to underperform. And from my analysis, the other tanker stocks, the ones who are more heavily exposed to the charter rates, they are underperforming in this market. They're trading at half the intrinsic value because of that fact that they can't take advantage of, you know, day rates of 100,000, 150,000 in the spot market with the vessels that they have chartered out. But there are, of course, profit sharing agreements, so they don't lose all the upside, but they don't get all the upside, and that's kind of why investors are probably more interested in Nordic American Tankers, because the metrics, they look more attractive. So talking about that premium, I think in the long term, my expectation is that when the tanker market normalizes, or when the other tanker companies who were on charters and probably stopped rechartering vessels whenever possible during the during the bull market, when they start having more exposure to the spot market, their earnings will start improving. And at that point in time, the differentiating factor of the reflected earnings or cash flows that Nordic American Tankers is earning above what its peers are earning, that kind of will evaporate, and maybe investors will say, hey, I can buy this other tanker stock which has about the same fleet, the same earning capacity as Nordic American Tankers, but they're half as expensive or a quarter as expensive, and then they'll start moving into that stock and they'll start selling out of this stock. So that's kind of the downside risk in terms of that premium that Nordic American Tankers is enjoying. But I wanted to also touch on one more point before I end this video, and this is kind of going into the history of Nordic American Tankers. I saw one video in which this YouTuber, who has lots of viewers obviously, was talking about his expectations of $10 to $15 a share, and he was basically comparing it to 2015, and he was saying that back in the 2015 bull market, this company was at $15 plus, and the rates in the 2020 bull market are higher than they were in 2015. So the problem here is that it's kind of a bit ignorant, even though that person said he knows the companies, he's researched it, but you can't compare Nordic American Tankers from 2015 to 2020. The reason is the following: when I bought them back in 2014 at $8 a share, they were paying a 16-cent dividend. They had 25 Suezmaxes. They had no debt on the balance sheet. There was even like a dip in, I think it was September 2014, where I had a chance to buy more at $6.50. And the stock rebounded to $12 a share. I sold most of it, I guess, and I kept 50 shares all the way to the top, which was exceeding $18 a share, and I held them all the way down to the bottom, because I didn't think it would be such a bad bear market. I didn't really have a conception. I thought this was a good company, and I thought it was just going to go up, but it didn't. So one thing they did in the bull market in 2015 is they bought 8 additional Suezmaxes. They increased the size of the fleet to get the earnings per share and the cash flows per share up. They bought those second-hand vessels for decent prices, I guess, at that point in time. And during the bull market here, when things were looking great, I think it was around here in 2015, they raised $90 million through an equity issuance to fund 3 additional Suezmaxes, which also they paid half of it from cash on hand, I guess, and half from the equity raise. And those 3 Suezmaxes were scheduled then to be delivered in 2018. So they would have gone from 33 to 36 vessels over that time span. It was kind of their plan to grow the fleet and grow the company. And at the point in time, of course, they were making so much money they didn't know what to do with it. Basically, they set up another company called Nordic American Offshore, put $250 million into the IPO, $6 a share. It went to 18 in a hurry, and from 18 it went almost in a straight line down to 50 cents, because the strategy of operating platform supply vessels in the North Sea did not work out so well. I mean, when they got in, it was really favorable, but they then struggled to get the vessels employed. I think they had 9 PSVs, and they only had like 3 of them or so working at all times, and due to the idling of the fleet, they were not making enough money to cover their expenditures. They were paying a dividend, and Nordic American Tankers had to participate in every fundraise that the company made to raise new capital to stay alive, and Nordic American Offshore just went south for them in terms of the investment. It didn't play out at all. And also Nordic American Tankers, they then saw their own business deteriorating. So on the way down, they did some equity issuances where they raised more money issuing shares, and at some point it was not possible for them to raise money anymore because the market had deteriorated. Nobody wanted to put money into them. So they started selling Suezmaxes, and I think they sold 13 of the 33 they had on the way down into the February or January low in 2018, when Suezmax rates on the spot market reached a low of $4,000 a day. So $40,000 right now looks really attractive compared to $4,000 a day. And during that time, of course, they also, of course, took delivery of their vessels in 2018. Their 3 new Suezmaxes. I think they put 2 of them on long-term charters for $21,000 a day. I think one of them was like a 3 to 5 year charter, and that kind of reflected how how much they were struggling, because they couldn't make money in the spot market. The spot market was weak, and at the same time they wanted to stick to their strategy basically, and they needed to put some vessels on charters to make some higher rates than they were at that point in time. So also during that period of time, during the 2018 bear market, I think it was, they also issued 400 million or so in debt, and they refinanced that again later, and as a consequence they went from a company with no debt, with a high dividend, with 33 Suezmaxes and 3 on the order book, to a company with only 23 Suezmaxes and 400 million in liabilities. And due to the issuance of shares, of course, the share count has increased over that period of time. So if you think about it conceptually, the fact that rates are higher now than they were in 2015 does not mean it has to go to the heights it was at in 2015. I would argue that since they probably went from, I think, like 60 million shares or so to 140 million shares, it's quite conceivable that $9 is more likely the top than just a stepping stone to another top. So really the only way to see them improve from here, I think, is to see another massive leg up and a prolonged bull market. I think the only incentive here for customers to pay higher rates is if you see the restart of the economy leading to more oil demand having to be shipped from one place to another, and whether that happens or not, or how much the rates will reflect for that kind of a business, is really questionable. We will see, because one thing you have to always keep in mind is that the contango trade with the oil price, it's an abnormality that allows people who are chartering the vessels to pay really, really high prices to charter the vessel for a period of time to make say 10 or 20% return based upon the oil price that is the difference between the front month and the back month, or the front month and whichever month they are trying to sell into. So that kind of allows speculators in that market to pay outlandishly high rates. But when we go back to a normalized market, there will be times when there is no demand for Suezmaxes, and then the rates will be back down below 10,000, and then there will be the normal times when the rates are probably going to be in the 35 to 40,000. So that's kind of the long-term picture, and we will see how this progresses. But I just don't think that Nordic American Tankers has much of a chance in terms of the share price appreciating here, because, as I mentioned, the premium is probably going to evaporate as more vessels from other tanker companies come off the charters they have been on, and that will then lead obviously to this re-rating, where it's rated down again, where it's going to become similar to all the others, and it's going to lose its premium. So I guess I'm going to leave it with that for this video. So I'll leave questions, comments and opinions, or hate mail or whatever, in the comment section. If you like the content, don't forget to subscribe, and have a good day.